All right, so it's now recording. So let's say um strategy is in terms of like everyone that trades have their own way of trading. They have their own way of entering the market. Just like you as a person coming to that fight, you have your own way. Maybe you are someone that you know how say your hand's strong. You know how to punch. So when you enter your own fight, you are always the first to throw the first punch. While someone else knows he's weak, he knows that he doesn't know how to throw punch. Then he always waits for someone to fall down for him to now go and jump at the person to start beating the person on the ground. That's his own strategy of entering the fight. So in trading, everybody have their own strategy. Is a method of trading that everyone has their own style of trading, right? But people overrate strategy a lot. If you don't know what it is, you go and look it up again. So people overrate it a lot. People think that once you have a strategy, that you are you that's the main thing. As long as you get the right strategy, that you win in the market, that you make so much money off the charts. But what people don't know most of the time is that it's not really about strategy actually. Because like I say, when you come to that fight, first of all you ask what is happening in the fight before you decide to join the fight. Now, strategy is just your way of joining the fight. But based on what is happening in the fight, you have not asked that question yet. So it doesn't matter the kind of the way you trade or the strategy you are using to trade. If you don't ask what's happening in the fight, most likely, most times, you're going to end up in the wrong team and you're going to lose because you don't even know what's going on in the charts. So the main thing about trading, the first lesson I want you guys to know, please write this down if you will, whether you are on Instagram or you are in Zoom, write this down if you will. The first thing that you need to understand about trading is price action. It is not strategy. Price action. Price action is you asking questions, you being able to monitor the chart, look at it and be able to understand what is going on in the chart, to be able to understand which team is winning the fight at the moment. Right? That is what you call asking questions of what's happening in the chart, knowing if it's if it's in an uptrend or if it's in a downtrend, right? Because market moves in trend, but I'll come to that later. So basically, what I'm saying is that it's all about you knowing who is winning the fight and who is losing the fight, whether it's in an uptrend or it's a downtrend, what's happening in the fight before you now talk about entering. And remember, you entering the fight is what they call strategy. This is just me explaining it for you in a very simple, basic way. You entering the fight is what is when your strategy comes in, but you asking questions, what's going on in the chart, is not your strategy. It is called price action, understanding what's happening in the market, right? Which I will teach you all tomorrow very well. But first of all, you ask the first question, which is understanding what is happening in the market. And then the second question being finding a way to enter the market, asking what's going on in the fight and finding a way to enter the fight. That is how you trade. Now, when you get into the fight, you need to know the way what you plan to exit or the way you plan to where you like it's basically when you are in the fight, you're realizing that team B is winning team A in the whole fight. So you join team B. So now follow and beat up team A. Then you have your stop loss and your TP. But that one I'll come to that one later on. But now I've explained to you guys two things. The first thing about trading is price action, and then you talk about your strategy. Now, another thing that I need you guys to understand is that another very important lesson that I need you to write this thing down is that for every trade you take in the market, you might take a trade today. If you have been trading already, you will understand this what I'm about to say. But if you have never been trading, you will understand it later when you start trading. But when you take a trade today, maybe after you take that trade today and win that trade, when you take another trade tomorrow, even though they might look similar, even though they might look exactly the same thing, what I'm trying to tell you is that it is not the same trade. Two trades can never be the same because this is why I tell you that it can never be the same. You are talking about you're trading the currency pair, USD against dollar, and you know for a fact that we know for a fact that what makes USD move is what me and you does. The only thing that maybe me and you are too small, maybe the money we have is we don't have enough influence to be able to affect the market. But with a number of me, 10x, 20x, 30x, 40x, when we do a particular thing, it kind of moves the market. When let's say I'm the president, if I go and borrow money from China, do you know what's happened in Naira? Naira, you see a red candle in Naira, we will go down. That is action of what I did that caused that our market or our price or our currency to go down. which is now telling you that what I did caused our market, our currency to go down. So when you see the chart, let me show you guys. Can you see my screen? I don't know. Okay, let me share. Let me share my screen. Let me share my screen instead of the whiteboard. Okay, let me share the screen. Can you see my screen?
Yes,
Yes.
Okay.
yes.
So, like, what I'm trying to tell you guys is that whatever is happening here in the market is not like this candle is just this blue and red candle. When you see it, know that these are people, these are actions of people in that country, actions of people that use that currency. This is what they are doing that is causing this movement. These candles are just representing what people are doing. You get, it's not the candle is not something that I don't know. Some people say uh, the banks. I think what they mean by the banks is that people that have money, that have highest money, when they make some moves, it moves the market. Yes, good. But my point to you guys to correct you on that is that I'm telling you that what moves this market is people. What people do, what the country does, what the government does is what makes this market move, whether it's going to go up or it's going to go down. If you do a negative thing, of course, we're going to go down. If you do positive, of course, we're going to go up, right? So this candle represents people. It's not just candle, it represents people, basically. So what me and you do is what will make anything happen in this candle. So if you are saying that a trade that you took today is the same thing as the one you took yesterday, that means that you are saying that every single thing that every single person in this Nigeria did was the same exact thing that they did the next day at the same time, at the same hour, at the same minute that made that trade to be the same thing. That is not possible, right? It's impossible for all of us to do the same thing, the same time, the same minute, the same second, every in 2 days in a row. It's not possible, right? So you can come to the chart and something that looks similar. Maybe you because you took a trade, let's say maybe because you took a sell, let's say because you took a trade here to go down. And then because now after you won, you come again and see this one and say you take it again to go down. And you say this is exactly the same thing that happened here, that happened here. No, I'm telling you now, no, it is not. Because these charts, these candles represent people. And there's no way for me and you to do the same thing at the same hour, at the same minute, every single day. Because that's what I'm trying to say if you say that it's the same thing. So it's not the same thing, right? So this candle represents people. That's another lesson I want you to know. If you have this in mind, you're not going to look at every trade the same. Because what people do that make them lose money a lot in most occasions is that they see every trade as the same thing. You see the first trade, you take it, it's tomorrow, you think this is the thing you do today that will determine the thing you do tomorrow in this particular trade. And that's the reason why most times rule-based trading, the trading that they'll tell you that you have to have rules, this rule, do this, do that, do this, do that. Most of the time, it doesn't work because
Hey.
they are not the same thing. Please mute yourself if you're making a hell of noise, Jennifer. So they're not the same thing, right? So you can't look at the same two trades the same. You have to look at them differently. That's just how it is. So one mistake you encounter a lot when you're trading, when you start trading, when you start learning how to trade, or when you start getting good at trading, is that you see yourself seeing trades as the same, and that's a mistake. Because if you start seeing it at the same, you start trying to do what you did yesterday in this occasion, and this is a completely uniquely different day and different time and different scenario. So it can't be the same. It's most times you lose your money, and that is going to also make you lose money a lot of the time. So you have to understand that every single time you're on the chart, you're looking at a whole new different situation. So that's why they say when you lose the trade yesterday, forget about the loss from yesterday, learn from it, but forget about the loss and then come into tomorrow because tomorrow is the whole new day, right? So
Yes.
that's how it works. So these are human beings, and every opportunity can never ever be the same, right? So I've talked about what Forex is, told you what your job is as a trader, how you want to see your job as a trader. I've told you how opportunities appear and how they're not the same, right? Then the next thing that I would want to point out to you guys in terms of trading, that another important thing that you encounter a lot that will really fuck you guys up a lot is in terms of managing risk. Now, when you hear trading, the first thing that comes to everyone's mind is that this is a place that they are coming to come and make money. We are coming to come and make cheddar here. So you're already imagining how you drive your Benz, how you drive the Lamborghini, how you drive the whatever the case may be, right? But I'm trying to bring you back to reality, come back to life, because that is not how it is, right? I'm going to use this as an example. When you start trading, let's say you start trading, you start getting good, you start trading, getting better at your trading, becoming good at your trading, and just slowly getting better, right? And you're trading $100, let's say $100 account. You have a small account, $100 account, right? And you are making money in it. Just because you're making money in that $100 account does not mean that you make money in a $10,000 account. Yes, people say that it's just the same thing. It's just numbers. It's just a different number. That you should see it as the same thing. But I'm here to tell you that in trading, money is emotion. They say control your emotions in trading. You can't control your emotion. You can't avoid your emotion. You can only control it. So they say try to avoid emotion in trading. Don't get yourself get emotionally attached to a chart. But you can never avoid trading because money is involved. So you can only control the emotion, right? So when you get $100 account, the emotion, the pressure that comes with $100 account is not the same that comes with a $10,000 account. These are two different pressures, right? So you being a trader that's trying to learn how to trade, that's trying to get good at trading, that's trying to build yourself to start trading, to start making money in trading, right? You cannot think that because you are trading $100 account and making money that you should just go and fund your account to $10,000 that you make money in it as well. The emotion might be a bit overwhelming for you. So the best thing you do is that you try to grow, constantly make money in that $100 account, get to 200, 300. You say see that you are consistent in it, see that you are doing well in it, see that you are at a very stable ground, and then slowly you increase your capital, slowly. And then as you do that slowly, you start to get used to the risk day by day, get used to the accounts day by day. And the more you do it, the more you grow. And that's what they call, that's me explaining for you guys, risk management. If you are in terms of the charts, when you want to take a trade, it's not about how much you are making in the trade. It's about how much you are losing in the trade. Because most guys, when they want to take a trade, the first thing they go and do is that they're already thinking, if I take this trade now and this thing reach here now, guy, I go make $500. Jesus. This person that's saying this now has a 55, it has a probably a $50 account or $100 account. And he's saying that if I take this trade now, this thing gets here, I'll be making 1,000 dollars. And they're forgetting how much they are risking, and they're forgetting how much they can be able to afford to risk. Now, in terms of being able to afford the risk, because most people, what you encounter a lot again is that when you come start trading, you start seeing this thing of risking 1% a trade of your account, risking 1% of your account in a trade. Why that may be true, there's another way of saying it that makes more sense to people, because when you see that, people now think that so 1% of my account, that means if I fund my account is $100, I'll risk $1 each trade. But that is not actually what the whole thing means. What the whole thing means is that they're basically saying to you that when you, let's say you want to trade and you've brought out $1,000, that you want to use this $1,000 to trade now, you can decide to fund your account with $100 instead of that whole $1,000. You fund the account with $100 and keep $900 on one side. Now, when you are trading in that $100 account, you can risk $10. You can risk $50. Someone outside will see it and think that you are risking half of your account in the trade. But actually, realistically, what you're just risking is just a fraction of the whole money you brought out to trade with. So in terms of trading, don't get yourself too attached to that 1% risk, 2% risk. Just know what you need to know is that how much am I going to bring out to invest in trading? And then when you bring out that amount of money I want to bring out to invest in trading, then you want to start funding your account with that amount of money, but in bit by bit to see how far it's going to go. If you, let's say you have a $1,000, you can fund with $100 first to see what's up. Then if that one doesn't go well, put out $100. I'm saying this thing for someone that is already good. If that one doesn't work, put out $100, right? If that one works, like it's just you now risking small, even though you might be going crazy on the account, risking $10, $20 per trade. But I'm telling you that the the amount in your trading account isn't always what you can afford to lose, right? Maybe you can afford to lose higher, right? So it's always important for you to understand what you can afford to lose. When you know what you can afford to lose, then you want to break that down into small pieces to then use it and trade, right? And what that does for you is that reduces the pressure.
Okay.
Because most times when you are trading, you see yourself in an opportunity that is good, but because it didn't start the way you wanted it to start. Let me give you an example. I took this trade last week, right? Actually, I took this trade around here, right? And then at the start of everything, it didn't actually start the way I wanted to start. If I had a big risk in the trade, when this trade is around here in loss, what I would have done is that I would have closed the trade. I would say, Omo, this trade is like not going to work out because the money I'm risking is too much. You don't know this, so but you know that it's like this is not going to work out. Like every minute you come to come and check what is going on in the chart to see how is it going, how is it going.
Like for stop loss.
The emotions, you have emotions in that trade, and it's because you probably risk too much money that you can afford to lose. So you want to be able to, as a beginner that's trying to learn how to trade, you want to be able to be risking a very small amount of money that when you are in the trade, you don't forget that you are in the trade itself. Because you have already put your stop loss and TP and just let it to do whatever it wants to do, and you see what result it is, and then you know how you want to be able to manage later. But my point is that you want to be able to take away your emotions as much as possible from trading. And one of the best ways to do that, because emotion is what will ruin you. It's I'm telling you now that first of all, you can't avoid the emotion. So there's no way that to say you can avoid it. You can't avoid it, you can only control it. And the best way to control it, one, risking what you can afford to lose, risking low. It helps you control emotion, right? So now for you as a beginner, for you that's watching me now and seeing me, and you're wondering, so this thing that is I'm hearing now that is interesting, how do I even start the thing? Or people that already started trading already, and they are, let's say, you learned from somebody, right? Because we all know. If you don't know, please do your research more, or go to I'll give you guys the link of where you can go and learn proper basics, right? But we already know that Forex Move has three major sessions, which is the London, the New York, the Asian. That's the session that I use a lot. I think there are four. For me, I only know three. I only use three. I only know three that is mostly used. That price moves well in this three. So the other one I don't that is called Tokyo. I don't know about that one. So I know New York, London, and Asian session, right? We know these pairs move during this period. If you don't understand what I mean by this, a simple example, just like you as a Nigerian going to markets by 10 p.m. Of course, you may see people selling, no, but they're going to be few. And the fewer they are, the more they will sell you goods at high price. Something that they sell 1,000 naira, you go and buy it for 4,000 naira because people that are selling the market when you went to the market are very few. So they know that if you don't see it here, you probably not see it any other place, or you are in a hurry, you need it urgently. So they will sell it for you at higher price. But when you go to the market, when market is open around 10 a.m., 11 a.m., 12 p.m., 1 p.m., people are in the market, but the market is full. So when you come here and price something and they tell you that then they tell you this price, you can go to another place and go and price the same thing to know if they're telling you the correct price.
Yes.
Right? So that's what basically means telling you what volume is. Volume is just you coming to the market to buy something when everybody is in the market, so that because you know that the more people are in the market, the more you're going to get goods at low cost or at the correct cost of goods. So these sessions, this London, New York, Asia session, are just when the market moves the most, when there's a lot of people in the market, right?
No, during London and
London starts
New York
around
State crossover now.
Please mute yourself. London starts around 8 a.m. and ends around 12 1 p.m. Then New York starts at that 1 2 p.m. and ends around, let's say, 5 6 p.m. That's when it starts to die down, right? And then Asian is around 1 a.m. to like 5 a.m. That's when it's most volatile. That's when you see price moving a lot at the market at that time, because that's when it is most volatile. That's when people are in the market, right? So this is me explaining for you session, right? So That's just what it's all about. So you trading now, you being a trader that is trying to trade. You want to trade when there is volume in the market, when people are in the market enough, so that you can be able to trade with volume. This is what volume pushes looks like. This is like around here was when there was no volume in the market, right? But this drop here is when there was volume. Let me mark it out again. Around here is where there was no volume. Can't you see things were moving up and down, but are still at the same place because everything was slow. But around here is when volume came into the market. And do you see how far everything moved, how fast everything moved? So you want to be trading when there is volume in the market so that if you decide to sell, your move, you have volume in your side and you're not going to get picked out by all these up and down movement that isn't really making any move. So the essence of you trading during session is you knowing when to trade, knowing like you trading when there's a lot of buyers or sellers in the market, right? So my advice to everyone that I always put in my page, for you that wants to start to trade, you want to know how you can start, and you want to know the best advice on how to start. For me personally, what I will tell you is that the first thing you need to know, whether you learn from somebody, whether you learn from me or you learn from someone else, right? Because I still teach how to trade, but whether you learn from me or you learn from someone else, does not mean that you have to go and trade at the same time those people are trading. Let me give you an example. So you learn, let's say you learn from me, because I trade mostly during New York. So I like to trade around from 2 p.m. to 6 p.m. That's when I trade mostly. If I don't see trade at that time, I come back the next day, right? So let's say because I now taught you how to trade, you now want to start trading at that same time that I trade. But I'm telling you now that is not just what decides on when you should trade the market. And here are what decides when you should trade the market. First of all, because trading is all about you. Like everybody has different views and opinions about the market, but I'll also get to that one later. But like when you come in the chat now, right? When you come and like you come and say you want to start trading, the first question you need to ask yourself is when are you free? Let's say you are someone that works in a 9 to 5 job. Maybe you work from 9 a.m. or from 8 a.m. to 12 p.m. or 1 p.m., right? Or you work from 8 a.m. to 5 p.m. What I'm telling you is that when you ask yourself when you are free, those schedule when you are working or when you are busy, you shouldn't be trading at those times. Because what you are doing, like you're telling your brain to focus on two things. Some might say, but I'm not busy at work. I just go there and sit down and not do anything. That's why I want to trade so that I can be able to trade on my free time at work. But I'm telling you now that the fact that you are sitting down in your office, automatically your brain knows that he's already in work mood.
Yes.
Right? So he's already in work mood. So when you come and try to trade, you're telling your brain to focus on two things: work and trading. And trading is what you need to control your emotions in. So how can you be able to focus when you are trading, when you are also working? You might think you can do it, but I'm telling you now, you should not do it because it's going to ruin you eventually. So first question is, when am I free to trade? Are you free in the morning? Are you free in the night? Are you free in the afternoon? That's the first question. When you find where you are free to trade, the next question you ask yourself is, write this thing down. First question is, when am I free to trade? The next question you want to ask yourself is, what session is that? London moves 9 a.m., 8 a.m. to 12 p.m. New York moves 12 p.m. to 5 p.m. And Asia moves 1 a.m. to 5 p.m. So within these times, you must be free in one of them. You need to ask yourself, when am I free? When you find out when you are free, then you ask yourself, what session is trading at that time that I'm free? When you find that session that is trading at that time you are free, the next question, being the third question you ask yourself, is what pair is in that session? Next question is, which pair is during that time? Next question is which pair moves during that time, right? Now in currency pairs, they have different pairs. You have euro. Let me write this thing down real quick. I'm going to write everything down, but I'm going to write down some. You have like euro, USD. Make this. You have like euro, USD. You have USD, JPY. You have, let me say, GBP, JPY. Right? So let's say you have these three pairs. I'm going to just use these three pairs to do as an example. Right? You have these three pairs. So you have these three pairs, right? Now, these three pairs now, they don't move the same at the same time. USD JPY, this is basically the short form of US dollar, Japanese yen. This is just short form of US dollar, Japanese yen, which tells you that this pair moves well during New York, which is US dollar, and then Asian, which is Japanese yen time. Right? JPY is Asian session now. It's Asian pair. USD is dollar. So USD moves more during New York. JPY moves more during Asian. So you shouldn't be trading this pair during London session. So with this being said now, each pair moves differently at different times. So after you found out when you are free, you find out what session is trading when you are free. The next thing is which pairs move well during that session that you are free. There's so many pairs to trade in trading. If I come and search here, you see a list of pairs. If I go to Forex, see a list of pairs. There's so many pairs, right? Let me come. Sorry, let me take this out. See a list of pairs, right? So when you go and find out which pair moves well during that time, you're probably going to see up to 5 pairs that move well during that time you are free. You will see up to 5, right? So now, when you've seen up to 5 pairs that move well during the time you are free, let me see if you guys have any question. Okay, so when you see the pairs that move well during that time you are free, then these pairs are the pairs you want to focus on. At least for that time you have that schedule. Maybe tomorrow when your schedule changes into another free time, you can now come and find out which pairs move well during that time that you're now free. But for now, focus on when you are free and find out the pairs that move well when you are free. Now there's what they call back testing. Back testing. Back testing is you using what happened in the previous data to decide what will happen tomorrow. Let me give you an example that everybody will relate to. We know that most times, whenever elections are around the corner, you start seeing politicians going to poor places, going to poor villages. Whenever you see them do that thing, just know that elections are around the corner, right? Or let me use another example for those that watch football. Let's say you want to play, you like Man City. If you check their last data, you see that they win a lot of matches in the past. Maybe in a season they win 25 out of 35 matches. That is past data. Then you are now using that past data to analyze what will happen in future. That is what when you are doing your own betting, that's what it is. But trading is not betting, so I'm going to explain everything yet soon. So you are using past data to analyze what will happen in the future, right? That's what they call backtesting. So in trading, when you found those pairs that you want to trade, what you want to do is that you want to come to those charts. This is how to start trading. No, I'm telling you how to start trading like on your own. I don't advise this because you have a lot to learn too. Like I'm explaining this class now. There's things I'm saying now, probably saying now that most people don't even know that is it for, but now they know. So you can learn on your own still. If you want to learn on your own, this is how it starts. After you found this thing, you want to come to that pair and go back like some years back, maybe 5 years back, right? Maybe go back to like 5 years back, and then analyze the market. Maybe let's say just on your own, just come here, look at it. There's something they call replay 2 in this trading view. It's only for maybe if you sign up for this trading view for the first time, you have access to use this for a month free. Then you can use those replay 2s. What those replay 2 does is that you can come and cancel out here and it delete everything that happened in the future. You won't see it. So when you come and see what's going on here now, you can predict what will happen next, and then you play that thing, and the thing will play out what happened next. Right? So that's what the tool does. So it's a very important tool you can use on your trading view when you sign up for this trading view. But my point is that when you just come to the chart, maybe a few years back, you see it, just be like, after you've learned the basics, after you've learned what they call supply and demand or support and resistance or whatever the case may be, I'll explain that now. But when you've learned that thing, you want to come to the chart and do what? Just look at it and be like, where do I think this market will go from what I've learned so far? When you see it, put that trade on it and just put it on a demo account. Put that trade down and just see what the result will be. Do it to the current data. If you do it, you're going to find some patterns. Now let me break this down more so that it makes sense, because now I think it's not making sense to anybody. First of all, let me explain that support and resistance. It's just like your house. You live in a 10-story mansion, in a 10-story building, and you are in the down floor. Let me draw this. You live in a 10-story building, and you're on the down floor, and you have a roof. The roof is what they call resistance, and your floor is what they call support. Right? I'm explaining this thing in a very simple way for everyone to understand it. So your roof is what they call resistance. My roof now is what they call resistance. It is stopping me from going higher. Then my support is what I'm standing on. Now, if I go above my roof, my roof turns to my support, because now I'll be standing on my roof. Right? Am I correct? Are we there?
We are here. Oh.
Okay. So if I break above my roof will now become my support. Right? Let me explain this in the chart a little bit. Let me go to what is going on now. So market, you see this thing standing here. This was like resistance, stopping it from going higher, right? So this was resistance stopping it from going higher. Let me stopping it from going higher, right? And then when price broke above the resistance, it turned here to support and then started moving up. I won't explain this in detail today. It's on the next class, but I'm trying to make a point. I'm trying to tell you what they call support or resistance, right? So when you've learned what these things are, because these things are what actually shows you a glimpse of what might be happening next in the market, because there is support and there's resistance, there's supply and there's demand. Supply and demand is what moves the market. The more demand there are, less supply there will be. The more supply there is, the less demand there will be. If there is a particular good everywhere, people are not going to ask them too much again. But if those goods become rare, people will start asking for it a lot, because now they have not seen that good for some time, so they're asking for it a lot now. So these things are what moves the market: supply and demand, support and resistance, right? So when you've learned this thing, basic one you should learn is just supply and resistance, that's supply and demand. When you learn it, you want to come to the market, go back to some time backward and just analyze for tests to just see what you would do. Right? So that's one way for you to improve, one way for you to trade. I've told you that you want to trade, find out when you are free, find out what session is that when you are free, find out what pair moves when you are free, then analyze those pairs, back test them, and find the one that moves the most, that you understand the most, because they don't move the same, they move differently. So you find the one that you understand the most. When you find the one you understand the most, then probably 2 or 3 of them, Those ones are the ones you want to focus on. Most people like to trade many pairs. Some people like to trade all pairs. But what I'm saying to you, when you fall to that category in the future, or if you're already in that category now, I'm telling you that each pair moves differently. So the less pair you trade, the more you understand how they move. The more you trade, the less you understand how they move. So if you focus on few, 2, 3, 4, I don't know, but the less you focus on, the more you understand the movement and the more you understand how to be able to trade it. Right? So that back testing will tell you what the movement is according to you. This thing I said now, you finally see two people that will go to the same pair or go to the same chart and find out different things about themselves. Some will see that they are free in the morning. Some will see that they are free in the afternoon. Some will see that they are free in the night. Some will see that they like this pair more. So will see that they like this pair more. Everybody will start finding different things. This is now you finding your own pattern. This is you finding your own strategy. In case you're thinking finding strategy is something so scientific, where they are using all these indicators and whatever the case may be. No, you finding strategy is just you finding a way for you to enter the fight. So this step I'm telling you now is what to help you find that strategy that is going to be aligned with you personally. Right? So when you backtest these things and backtest and check what you would have done and come to the future, you find that some of your actions align. There are some things that you have seen twice that align. There are things you start seeing, like when you write down, when you see one, you see what will I do? You see that you will sell. You write down why you would sell. Write down why you will sell, and then you sell. Tomorrow, write down why you will buy, and then you buy. Next tomorrow, write down why you want to sell, and you sell. When you have these trades, after you've seen all these trades, when you go back to these things you're written down, you will notice a pattern. I'm sure. Notice that there are things that come out every time, and every time that it comes out, you win the trade. You didn't know this, but because you were able to write it down, write down the trades you took and why you took it. Now you know this. Data, right? When you go back and see all these things, you're going to find a pattern that matches each other. You must find it, I promise you. You will see things that you didn't know about yourself. This is me telling you how to find something that works for you. Not something that works for me. Not what I use. Something that works for you. How to learn it yourself. This is how you do it. There's no easy way. There's no do this, it will work. Maybe if I do this, it will work. If you do it, it will not work. Because we are different. So this is how you find what works for you. So you analyze it, write them down. That writing down you are doing is what they call journaling. Journaling your trades. In your life, you have journal. Some of you don't. Most of you don't. But most people have journal where they write down maybe their plan for today, maybe their goal for in the next 5 years, and how they plan to achieve that goal step by step. That's a journal for them. That's their own journal. But in trading, your journal is you writing down your trades in the past and why you took those trades. That's what they call journaling your trades. That is going to play a very big role in your trading. My friend, my sister, my brother, if you don't journal, you can have a good strategy. You can have a good this, a good that, a good this, a good that. If you don't journal, there are things you don't know about your trading that will keep fucking you up, and you won't even know that it's fucking you up until you start journaling those trades. That's why they say, what am I going to use to explain it now? When they say, when you come to trading like this, like what I'm trying to say is that when you journal those trades, you are going to see patterns that you did not know were in existence. Things that you didn't know about yourself. I'm telling you now, if you are to now go to your workbook and just be mean, just leave charts first and write down what you did today and why you did them. Tomorrow, again. Next tomorrow, again. If you did this for 3 weeks, you realize that there's something about yourself that you did not know that is sitting down in that place. You see yourself writing your own faults and strengths in your own handwriting. You notice them. If you try it, you see it. And that's the same thing with charts. Whenever those traits that you're taking, you notice a pattern that whenever this thing happens, this is the result. Whenever this thing happens, this is the result. Then you can now start saying, okay, let me say, since every time this one happens, I lose most times. Let me stop doing this thing and start doing more of this one that every time it happens, I win most times. When you start doing that thing, when you start removing the thing that does not work and start doing more of the things that work, this is now you start shaping up that thing they call win rate. Right? Before you went back and you analyze, you don't know what the win rate, or you don't know if you have a win rate. You just went back and analyzed to the front and realized that all this thing you took, you won 10 trades and you lost 20. No problem. It's cool. Then when you go back to that data, you revisit down, you start seeing those patterns that every time this happens, I lose more. Every time this one happens, I win more. Analyze those wins and analyze those losses. You see patterns on them. Then when you start doing more of those ones that work and less of those ones that don't work, you will realize that your win will go from win 10, lose 20, to win 15, lose 15. Because you have started removing the thing that don't work for you and started adding more of the thing that works for you. So you see your train move from losing 15, losing 10 and winning 10 and losing 20 to go from that to winning 15 and losing 15. Now you have what they call 50-50 win rate. Most times, when you do it and you do it in more in depth, finding out more in depth details about your same journal that you wrote with your own two hands. So it's not the one that I wrote for you. No, the one that you wrote with your own two hands. When you read this, you start seeing, the more you go in depth in that same journal, you start seeing yourself coming down to losing probably 13 and winning 18. Now you are now upgrading to like 60-40 win rate. Now the next step is what they call how you risk in a trade. Let me use an example to make this one very obvious. Let's say while you are going through that journal, you find out that there is like, when this one happens, like this one now, whenever this one happens now, chances say it go my way, it will go my way is very high. Like maybe when this one happened, like this thing now, this particular thing happened 10 times. 8 times out of 10 went my way. Another one happened 10 times. 5 out of 10 it went my way. Another one happened 10 times. 9 out of 10 it went my way. Now this 9, 8, and 5 out of 10, realize that one of them becomes your favorite. I would say favorite. Or I would say, because it's clear that one of them has a higher probability of happening over the other ones. Right? And this is what they call those high probability setups. In layman example, it is like you are, let me use football, for example, right? You are playing, maybe I want to play a bet against Barcelona versus Real Madrid, and then Barcelona versus another team that is small, one team that you don't, maybe Enugu Rangers. You see that against Real Madrid, 6 out of 10 they win. I'm not sure. I don't know if I'm correct. I'm just saying. I'm just using it as an example. So against Real Madrid, out of 10 they win like 6 times. But against Enugu Rangers, out of 10 they win like 9 times. So now, when Barca has match with Madrid, you risk smaller. When they have match with Enugu Rangers, you risk a little bit higher because you know that this is your high probability setup. And when you do this correctly, when you apply this correctly, you see that your win rate that was in 60-40 win rate will increase again. Because now those setups that you lose most times in, you have reduced your risk on them. Not like you lose most times in it, though, but like the chances of you winning in it compared to the other wins is lower. When you reduce your risk on them, you see your losing rate start to reduce more and your win rate start to increase more. Right? Also, another thing that I want you guys to understand is that because most people trade, and when they say that they are trading, and they tell you that when you take a loss, that it's just a loss, that you should just move on, forget about it yesterday, and come back to today. Why that may be true, there's a bit of force in that, in terms of that. When you lose a trade, maybe you have had that journal, and from your journal, you now found out, okay, by this time, trades moves more in my favor. By this time, this pair moves more in my favor. In this time frame, this pair moves more in my favor. When you find out these things, this is now your own rule of trading your own way that works for you. Now, when you're not trading that way, what am I trying to say again? Sorry, I'm saying this everything I'm saying now off from my head. I might lose track sometime. Please bring me back. But like my point I'm trying to make is that win rates in general, how to increase your win rate, right? When you start reducing those ones that you take, that the chance of you winning them are lower compared to your other wins. When you start risking less on them and risking a little bit more on those ones that chances of you winning them is higher than others compared to your other wins, you see your win rate starting to increase. This is how to increase your win rate. It's not by finding the magic strategy. It's not by meeting the magic signal or whatever. It is by you analyzing your own personal data and then slowly adding things that work more into your trading, because it's a business. Just like your business, when you do something, you pay for something, you do them. If you're in business and you know how to do business, you realize that you are someone that has a business that's successful now. You did many things in the past that did not work out. And then those few that you did that worked out, you started doing it more. And the more you did it, the more you see more results. That is you. That is just something I'm saying now in this trading. You did something in the past, you see that it doesn't work out that much. You start removing those ones that don't work out and start adding those ones that work out more. And the more you do it, the more you do the ones that work out more, the more you see yourself winning more than you are losing. Because in trading, you will lose. Some trades you will lose, not because you are wrong, but because it's just part of trading, you lose it. But the point is, sometimes make you is that you are trying to increase your win rate. You are trying to increase your wins against your losses. This is how to do it on your own. Finding it your way and doing it on your own. It's not by watching YouTube videos. So you can watch YouTube videos, all YouTube videos you want to watch. But if you don't have data concerning yourself on when things work for you, you're always going to see that missing thing that you always blow your account and you be like, I don't know what is wrong with me. It always doesn't work out for me. There's always something wrong. I don't know why, but it just always doesn't work out. It's because you don't have data about yourself. You have data about me that is teaching you how to trade on YouTube. Because what I'm teaching you on my YouTube is what works for me. What I'm doing that works for me. What I've analyzed according to my personality that works for me. That same thing may not work for you. But yes, you can learn one or two from what's working for me to now add it to your own. Like example, how I'm telling you these things now. This is me teaching you one or two things that works for me that you can take and add in your own way of trading to find out what works for you best. This is not me telling you exactly what to go and do that will work for you, that if you do this thing, you win. No, this is me telling you guys that if you do it this way, you'll be able to realize these things about yourself that will help you to find the way you want to trade for yourself. Another thing is that most people say, am I a scalper? Am I a day trader? Am I a swing trader? Someone will say, I like scalping because I like to enter trade and leave it immediately. So they want to be entering trade and leaving in 5 minutes time or 10 minutes time. Some will say they will take it and leave it for some few hours. Some will say they used to leave their trade for some weeks. My point to you is that you might be taking those 5 minutes scalping and you're losing money and you're asking, what is wrong with me? Why am I not getting it right? Why is the person getting it right? It may be that your personality is not someone that is in a hurry. You are someone that in real life, you are calm. But you want to come to the market and be sharp and become a flash that makes money in 5 minutes time, 10 minutes time. But I'm telling you that it doesn't align with you. It doesn't really align with the way you don't even know if it aligns or not, because you don't even know about yourself. So you understanding these details about yourself in the chart gives you a more detailed information about what time frame you should trade. If you do all these things I'm saying now, you start to realize what time frame works more, what session works more, what pair works more for me. And these things are steps that you can take to find the best way for you to trade. Right? Now, another thing that I know is that I also know is I will also advise. I will never, when I started trading, let me tell you guys my story a little bit. When I started trading in 2019, I was in year one. I was trading, trying to learn how to trade. And I was in year one, right? And yeah, I was losing money a lot, right? In terms of that, I was burning a lot of money in terms of like all this thing I'm teaching you guys now that I didn't know about myself. Right? So I was burning money. It wasn't just working out for me very well, right? But like the more I was trading, let me take this off. So like the more I was trading, okay. So like the more I was trading, the more I was losing, the more I was learning, the more I was getting better. My point to you is that one of the mistakes that I made then that really hurt me a lot was one, thinking that I can learn everything on my own. It's not like you can learn it on your own. You can learn it on your own, of course. But when you learn it on your own, you can make a lot more mistakes. Example, now I'm telling you how to find session that works for you. If I didn't meet you, probably when you learn from online, next thing you will do is that you start trading this pair that this person is trading at this time that the person trades it, not knowing that that time does not align to you. And then when you lose money, you now come and realize, okay, I think I need to start checking when it works for me more. And then you start checking when it works for you more. And then you start doing that thing that I'm seeing now. So you learning from me now stops you from losing that money you would have lost and doing the correct thing already. So you having someone that's teaching you trading, or someone that's better than teaching you how to trade, is basically the person showing you holes, showing you if you go this way, you probably end up like this. So this is better. This works a bit better, right? So when you do it, you save yourself that losses. So what you go and do, let me go and learn on my own. Cool, you can learn on your own, but after you have used some losses to learn, you realize that the losses you have taken and the time you have taken probably is taking you 3 years, 4 years, or 2, whatever the case may be, and you have lost a bunch of money. You realize that this money would have actually gotten me a good mentor and gotten me the right education and saved me time. So it's two things. You can learn on your own. It takes a bit more time, and you take the more losses, or you can get a mentor that can teach you how to trade, save some more time, and kind of go the right way from the beginning, instead of you having to learn the right way the hard way, which is by losing money, right? So that's why I say, yes, you can learn on your own, but our advice, the mistake I made then was thinking that I can learn everything on my own, going there and being the one to be the one that will learn. I read that time that I said I read like mad. I watched YouTube tire. I watched YouTube like crazy. I watched everything like crazy, but it wasn't just working out. There's always that missing piece. Now, in 2021, that was the first 2021 December. That was the first mentorship I paid for, right? And it happened to be my worst in terms of that. It did not go well for me at all. I entered there. I realized that the way that these people trade here, not be the way where I go like the trade though. This thing is not working for me. I realized that in the hard way, right? So me realizing that is not where I trade. I now moved on, pay for another mentorship, learn, pay for another one, learn. And then when things started making sense for me, I started to realize that in that first mentorship I had, I was thinking that it did not go well, but I learned some valuable things that I didn't know that I learned until now that more things that make sense for me. I'm not seeing myself applying those things that I learned there without knowing that I learned them. Right? So that's what I'm saying. Education is always key. I always advise to have someone that will teach you how to trade because it saves you time. Because when you see someone trading for 5 years, like me, I said I will trade for 5 years. Almost the truth is that out of that 5 years, I've been losing 4 years. And the truth is that I lost 4 years not because something is wrong with me, but because I kept making the same mistake over and over and over and over again. Sometimes you won't even know that it is a mistake. Sometimes you won't even know that it's a mistake. You keep making the same mistake over and over and over again. And then after, when you now realize that it's a mistake, you've probably lost some good amount of money. And then you move on. And you move on to the next one. And if you make the same mistake again tomorrow, it will still bring you back to level 1. Because that means you have not learned from that mistake. Right? So that's why I say mistake I made then was that I tried to learn everything on my own. Another mistake that I made was, which I've already told you guys, is thinking that strategy is what I needed. Instead, what I needed to do was to see markets from another perspective. Let me give you an example. I gave my student this few years ago. I'll give it to you guys too. Right? I don't know if you guys can see my whole screen, or is it only trading that you're seeing?
We are seeing the whole screen.
Okay, so let me go to my let me get this picture. I sent it on my system when I was trying to show it to the guy. I think it's this one. Let me check. Okay, this picture. It's on my IG as well. This image is on my IG as well. So now, this thing we are seeing here now is a cone, basically. Do you guys know what is a cone? A cone-shaped figure. A cone. Okay, let me say your house, for example. The house you are living in now. That your house you're living in now. If you come and view your house from the front, direct from the front, most people will see a rectangle. If you go and view your house from the side, most people will see some might see what should I say you may see? Some might see a double triangle, some might see so you will see a different shape. That's my point. When you view something from here, you will see this shape. When you view it from here, you will see this shape. When you view from another place, you see another shape entirely. But that doesn't change the fact that it is still your house. It did not change. The house did not change. What's changed is where you are viewing it from. So my point to you now is when you are trading, you need to view, like, the whole thing you are building is you're trying to build the way you view the market, because that is what will determine what you see. It's the way you view it that will determine what you will see, right? So most times, that time when I was learning, I was thinking that it is strategy. But the truth is that it was just the way I was viewing the market. Because I was viewing the market as if I can just enter here, say the banks are doing this and they are doing that. And if I just enter here and put this one here, that I'll win, because it is sure that I'll win. But meanwhile, I should be viewing it more, like I told you guys, as a fight between these two teams. So I need to know what's happening in a fight to be able to know how to get to the fight. That's it. I just told you guys, it's just a way I view the market. That I see it is profitable this way, viewing this way. So my point to you is that most times it's not the strategy that is the problem. It's not the way. It's just that the way you are viewing it is changing the thing you see. So if you see the way you trade not working out for you, it is usually because of the way you are viewing it. You are viewing it the wrong way entirely. You are viewing that market the wrong way. And that's where trading is difficult, changing your perspective. And these steps that are giving you, if you follow these steps and always keep your journal, you always see your perspective change because it is in your handwriting. You always see it change. And when you have a mentor as well that teaches you how they view the market, and mentor, let me explain to you guys something. Mentor is not someone that will teach you how to trade. That one is a tutor. Tutor is someone that teaches you how to do something. But mentor is someone that guides you in finding the right path for you to follow and trade your way. That's what they call a mentor. A tutor is someone that shows you how to do something exactly like this, while a mentor is someone that guides you when you're trying to find your way in something, right? So having a mentor is you having someone that can kind of guide you when you make some kind of a mistake. Even when you don't know it's a mistake yet, that person can tell you that, okay, this thing, usually when you do this X number of times, this will be the result. So saving you that stress, that time, and that losses that you would have taken. That's why I say when I started trading, mistake was first, I can learn everything on my own. Secondly, um, thinking that the issue was strategy, but actually it is the perspective, the way I view the market that was the problem. Because when you change the way you view it, what you see will change. That's why I use this picture. Because if you look at it from the bottom, this is just 3 circles. When you look at it from the side, this is giving you, I don't know what this shape is. When you look at it from this side, you are seeing 3 lines. It is still the same image. These things are still the same image. What changed is where we are viewing them from. So that thing that changed, because we changed where we are viewing it from, what we are seeing changed. So when something is not working for you in trading, you need to change the way you see it. You need to try to see it from another perspective, from another angle, to be able to understand. When you do that, what you are seeing will start to change. So the difficult thing I will tell you is that, of course, I won't tell you this is what you will do to see it, because I'm sure someone is already asking yourself. So how do I now try it? How do I now view it from different angle? How do I make myself different angle? But I'm telling you now that it is by that journal you are keeping. That journal is what will shape up the way you view things, shape up the way you approach it. So journal is a very important tool in trading. Journal is a very important tool in trading. As a matter of fact, I have a journal I use that I say that I wasn't going to say it in that class, but I say that everyone that comes to this Zoom would be getting my journal that I use. They'll be getting the templates. So I'll probably put it in the chat so that you guys can click it and have it so that you can use it to keep journal of your own trades. Because most people, the question they ask after they hear journal, they come and start asking, how do I keep journal? How do I know what to journal down? How do I know what to write down? How do I know what to save or something like that? So I'll be giving the link out. But the issue is that I have not copied the link yet. My phone is on live on Zoom and my system is probably busy. So I'll probably be giving the link in the group. So even people that did not come for the class will not get the link as well. But the point is that they don't know what the link is for until they watch the video. But I'm telling you that the link is going to be for, it's a journal that I use to keep my journal of my own trades. So, and this thing now tells you the fact that me that is teaching you, I have a journal that I keep, a journal that I write down all my trades. Now imagine you that is trying to learn, being stubborn that you will not keep journal. I'm telling you, many people will not keep that journal. I'm telling you now, like many people will not keep it because it is not easy to keep a journal. It's not easy to write down. Even you said that saying that I'll plan myself tomorrow. You never plan now. You still wake up tomorrow and not know what you're about to do. You don't keep your words a lot of times. So keeping journal is difficult. It requires keeping yourself accountable. So it's difficult. But I'm going to give you the journal so that for whoever that was going to put in the effort and keep the journal, actually it's going to benefit from it as well. But the next thing that I would say that was a mistake that I made when I was trying to learn is that I was thinking that what is holding me back is capital. That if I get a capital, if I get this money now, say na him go, I don't set for this trading. Say I just say I'm not get this money yet. If I get this amount of money now, I should have blown by now. But the truth is that that is not the case. Like I told you guys earlier, that you're making money in a $100 account does not mean that you make money in a $10,000 account. This thing I was saying now kind of contradicts it, but I'll explain everything well, right? Thinking that you getting money is what is holding you back. If you can't handle a $100 account, you cannot handle a $10,000 account because it's just a percentage based stuff, right? But I'm also telling, but I know I also told you guys that just because you're handling $100 account and making money in it doesn't mean that you make money in a $10,000 account because that is just purely emotion. The emotion in two of them is different. It is a different emotion entirely. But in terms of losses, in terms of you that is losing money in trading, because you are trading on a $100 account, and you're saying that what is holding you is getting a $10,000. I say if you get them now, you go begin to blow up, you go begin to make money in trading, you start making a lot of money in trading. But I'm telling you now that even if they give you a 100K, even if they give you a 100K, if you can't handle that $100 account, you will still blow up that 100K because it is all a percentage based game. What you risk, 1%, it might be here is $100 and here is $1,000, but it is still the same 2% risk. It is still the same 5% risk. It is still the same 10% risk. It is just different numbers. So capital is not what's holding you from starting to make profits off your trading career. What is holding you is the knowledge. You don't have enough knowledge yet to be able to make profits off your trading, right? So what I would say is my takeaway today is that I've told you guys what Forex is in a simple way, in a very anybody, even if you are 10 years, you understand what trading is now. I've told you guys what Forex is. I've told you guys how to approach the Forex market, what your job is as a trader. I've told you guys how you can find your way of trading, even as you are someone that is starting newly and you are trying to find your way. You don't know how to approach these things yet. I've given you the outline. If you don't know it, watch this video again. I've given you the outline of steps to do. If you do it, it will take time. It will take you 2 months, 3 months, 4 months, 5 months, 6 months, whatever the case may be. But when you do it diligently, you're going to find a pattern in the way you trade, right? So it's been 1 hour and 30 minutes. I would like to take some questions and we're going to call it the class for today. So please ask me your questions.
Hello, good evening.
Yes, good evening.
Okay, thank you for the class. The first thing I want to say is I mistakenly exited myself from the WhatsApp group, though I chatted you, help me add myself back. The second one is I used to hear enter the trade from here, enter the trade from here. I don't really get that. Is it that like you be the one to project where you enter your trade or what? Like that place is actually confusing me. This I enter the trade from here. I don't really get that explanation very well.
Okay. So I said that when you just go to the market, because you are a beginner trying to learn, you probably have an idea of one or two things. We are trying to also understand learn. I think you don't even know basics yet. That's why you ask the question of you don't know how to enter yet. I will explain everything on where to enter, why I entered here, and all those things tomorrow. But by what I give to you guys is just guideline, right? On where you to enter, how to enter, why I enter. Let's say I said, okay, that I entered this trade, I entered this trade under here now. And you are saying you don't understand why I entered there or the reason why I entered there. So I'll explain everything about this one tomorrow on the next class on the chat. So that is actually chat work, right? But what I'm giving you guys is just guidelines, advice that will benefit every single person, whether you are a pro, beginner, or complete novice. Because the more you go, the more you encounter this thing that I just mentioned, and you're going to see how you want to be able to use it to your advantage. So about where I enter and explain how I enter it, it should be tomorrow's class.
All right, thank you.
Thank you. Next question, please.
Yeah, good evening.
Good evening, my boss.
Yeah, please, I want to ask, for beginners like us, what do we need to get ready? You understand? So if you are trying to explain, we'll be, practicing from our own end to get the full explanation. Is there anything that you would like to tell us to get ready? Maybe download this, make sure you have these, and make sure you have these, so we can be able to follow along and, make the explanation easier for us to learn.
Okay. So when I opened the group, I said tools to be used. I said Zoom. I said mobile phone. Did I put trading view there? I probably didn't. Okay, I did not put that. So what I will do is that I'll drop the name of the app on the group, and I'll also make a video explaining to you guys how to open that account so that you guys can have this thing that I have here now. This is what people are going to be downloading. This thing that I have, this app now that I'm on now, that you are seeing on my screen, that's what people are going to be downloading. And so that then I'll show you how to set stuff to look like my own as well, so that it can make sense for you. So that's what I
All right.
do as send it in the group maybe tomorrow morning.
Okay, thank you.
So
Morgan, good evening.
good evening, boss.
My question is it a must that you must start trading with $100 account?
No, you start trading with what you can afford to lose. But if you are beginning for the first time, what you do is that you start trading with a demo account. A demo account is fake money. You having a fake money account that you can use to risk and trade. Even it is still real life markets happening and you taking real life trades, but it's just that it's fake money and you're not making any money in it. So I'll also show you guys how to open a demo account for those that don't know. So for a start, you start with demo account. But then when you now want to actually
Yeah,
life and fund your life account, it's not a must, it must be $100. It has to be what you can be able to afford to lose. If you can afford,
okay.
you can afford to lose $100, that's all you can afford to lose in trading. You can't afford to lose more. I would say fund it with, even though it's very small, fund it with $10 and leave 90 aside and try that 10 to see how,
Okay.
and then when that 10 blows up,
Oh,
try that 10. Find out why you blow that 10. Find out the reasons, correct it, try that 10 and see how it goes.
okay. Okay. Lovely. Thank you so much.
You're welcome. Any other question?
It's Timmy Amablis. If you have been trading with your demo account,
Yeah.
and you still in that same demo account, you still have your own SS account that you credited with let me say $30 or $20.
Yes.
But like the way I've been learned before that if that money is small, that you can't control the money, it's the money that will be controlling you. So that's the reason why I was like, is it possible for you to trade with a lower amount that is not up to $100,000? That's why I asked.
Yes, it's possible to trade with. Most brokers will tell you that you can fund. Some brokers will tell you that you can fund. Most brokers, you can fund minimum of $10 in it. Some might even say $5. But my point to you is that it's not about the money, it's about you. What can you afford to lose in trading? What is that risk that when you take it, you won't be so
It
bothered about
will
that?
not pay you.
It will not be so painful for you, right? It's not,
Yes.
I won't say the one that when you put it, you will not notice it, because it's money. They don't have free money in this country. You always need that money. I'm telling you that the one that will not pay you much, the one that will not inflict pain on you, that's the one you can risk.
Yes. Okay.
So it's
So
not
thank
about
you so much.
small or big, it's all about you. What can you afford to lose? And then that's what you need to do.
Okay. Thank you.
No problem. Next question. Is someone else having any other question that they can ask? Is that all for you guys? Okay, so I guess that also our class lasted for an hour and 30 minutes. Thank you guys for being here. I think I've touched up on things and like everything I taught in this class, I was said from my head. I don't have any PowerPoint that I have it that will guide me on telling me things that I don't forget anything. I don't have anything like that. Everything was said from my head. So for a fact, some things I did not mention. I'm human. So I would like for you guys to come to the next class on the question at time. Ask me some things that I probably didn't mention. You have questions, you just don't know how to ask it. But when you do your research and just look into what I've already taught, you have more questions. Bring those questions on because this is a 3 days, a 3 day class, and I've never done this before. Mostly I teach people for a paid fee. So this is just me telling you, bring your questions to me. I'll give you the answers to it right here and right here by myself. All right, so go out there, make some research, do the things I've already said in the video, get your questions.
Okay, please remember to add me back in WhatsApp group chat.
All right, what you need to do is that, do you have my number? Huh?
I sent that on WhatsApp.
You sent me a message on WhatsApp. Okay, if you texted me on WhatsApp, sure, I will now give you the link. Text me again saying that it's you. I'll give you the link to the group.
Okay. All right, thank you.
No problem. Any other question, please?
Hold on. What time frame is best to analyze?
Okay. So, like I said, time frame. For those that don't know what time frame is, right? Time frame means if I go to the 1 day time frame, this is the loading. This is the 1 day time frame, right? What this 1 day time frame means is that each candle here was formed in a whole day. And what this also means is that in this 1 day candle, there is 24 1 hour candle inside it because 1 hour per day is 25 hours in a day now. So you have 24 1 hour candle. So that means that if I go to a 1 hour candle now, 1 hour time frame, right? That what I'm seeing, that means that 24 of these
Is
1 day of the daily time frame. So that is also me telling you that when you come to the map, when you zoom in, you start seeing streets, your house, so many houses out there. But when you zoom out, you start seeing less houses and less roads. So the more you zoom in, the more information you see on the chart, the more noise you see, the more irrelevant information. Who is making noise? Can you unmute yourself?
Sorry.
So when you come to the chart, when you get like your map, right? The more you zoom in, the more you see more things. The more you zoom out, the more you see less things. The more you see more clear information, right? And just like your map is, the more you zoom in, the more you see that almost that shit where you define is now getting confused, you know. And then when you zoom out, you just see it make sense again. You see where you are and how to get there again. So that's the thing with charts. The more you go deeper in time frame, 5 minutes, 30 minutes, 45 minutes, 1 hour, the more you see more information. And the more you go out, going to more 4 hours daily, the more you see less information, less noise, and more clarity. So the time frame that is best to analyze, I can't tell you for a fact this is the best time frame to analyze with. No, this trade, I found this trade on the 2 hour time frame, right? But most times you see me trading with the 1 hour time frame. Fuck, what happened? Most times you see me trading on the 1 hour time frame. Sometimes you see me go to the 1 day to see information. So there's no particular best time frame to trade. All I can say is that the more you go in, the more you have more information and more noise. But the more you go out, the more you have less noise and more clear information, more clarity on the information. Just like your map, the more you zoom out, the more you see many streets. Sometimes you get confused. You be like, where am I even? Where am I now, self? But when you zoom out, you now see where you are and a clear road of where you want to get to. So it makes the more you zoom out, you see more clarity in the information you take. So high time frames give more accurate information, and lower time frame gives accurate information too, but there's more fake information there as well. So the time frame that is best for you to analyze with is you have to do that when I told you, and you start to see ones that make sense for you more. But I'll say for now, start from the daily, come down to the lower time frame to like 1 hour, or just start from daily and stop at 1 hour.
Okay, no problem. Thank you.
You're welcome.
Yeah, can you actually trade gold to any pair of currencies or just the United States dollar?
So I trade gold. I trade gold too, and gold is a pair that moves both during London session and also moves during New York session. So gold moves well during London and also New York. You can trade both sessions.
Let's go to the Great Britain pounds.
No, I'm saying go to the USD.
Okay.
As well.
Any other questions?
No, for now.
All right, guys. It was good having you guys in class today. I hope you guys enjoyed the class. If you enjoyed the class and you had fun in the class, please come to the group and drop a comment. It's to be open for you guys to drop how you see the class, what you think we should increase, more things you see we think I should do. So please come to the group and say how you found the class. But anyways, regardless, thanks for having you guys and see you guys on the next one tomorrow, 7 p.m. same time. Goodbye.
God bless you.
Thank you.
All right.